Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to go ahead and cover the M1 Finance Dividend Portfolio Weekly Update. This is for December 20th through the 24th with Friday being off, so really it's just 4 days. Now we're going to go ahead and make this as quick as possible. And we're going to go ahead and cover 5 topics. Number 1, the overall performance of the portfolio. Number 2, the weekly performance in comparison to the indexes. And also within there, we're going to look at the 1 year because we have 1 week left here in 2021. We have this final week here. I want to see how our portfolio did in the past 1 year in comparison to the S&P, the NASDAQ, and the Dow Jones, and we'll see where we are sitting at, right? Then number 3, the activity. What did we buy? What did we sell? What dividends rolled into our portfolio? Number 4, the current dividend income that this portfolio is currently paying, and that's going to be adjusting. I have 5 positions on that I wrote down here that I am going to be, in number 5, selling out of 100%. And I'm going to go ahead and cover what those positions are. I'm not going to go into detail as to why I'm selling out of these. They might be a little bit obvious, but we're just going to be selling out of them, having some capital on the side, and reinvesting or investing into new positions that offer better growth potential and overall performance for the portfolio. So with that said, if you guys are brand new here to the channel, definitely go down below, hit the subscribe to the channel, make it great, hit the bell to be notified every time I release a brand new video. You can go in here, hit the bell, make sure you get all the notifications going, and yeah, let's go ahead and get into the video. So really quickly jumping over into the M1 Finance portfolio, we're going to go ahead and cover the overall performance here. We have the overall performance as of January 8th. So we're almost at 4 years in this portfolio. In just, 3 weeks, I believe? Like a little less than 3 weeks, we would have hit our 4-year mark here on the portfolio. So currently our top performers here are Apple, Lowe's, and check that out, Pfizer recently overtook Main Street Capital. For quite a while, I think it was a couple weeks or months now, Main Street Capital had been in 3rd place. We can see a bit of a pullback in any BDCs and REITs just due to higher interest rates. Fed came out saying they're going to be raising rates a bit more than expected, and they're going to be making a couple different changes out there. But I saw that REITs, BDCs, and such did have a bit of a pullback. I know I saw Realty Income have a pretty big of a pullback in the short term here. So yeah, Pfizer overtook them and is now sitting in 3rd place. So Apple, Lowe's, Pfizer are 1, 2, 3. And then down towards the bottom, our worst 3 positions here are Clorox, Merck, and Colgate. Now, these positioning here, Clorox is not actually down 20.55 as that is showing. It's actually down around 7 to 8%. It's just kind of off. It's just slightly off there. And then we had some other positions that were in the red here recently. While everything's been kind of bouncing positive here in the short term, we have Merck that recently took a dip into the negative. Merck is not in my chop block, but there are a few other positions down here in the lower half of the portfolio that just haven't performed where I thought they would be. And these are positions that I've been invested in over the last near 4 years. So I'm just going to be thinning out of some holdings. And then in the future here, in the next 1 week, 2 week, I'm going to be taking a look at what positions I want to be added into the Roth IRA here. Obviously, I want to try and make them dividend positions that are for growth. So stay tuned for all that. Now, jumping into number 2, the weekly performance here. Our weekly here is actually down by 0.23%. If you can believe it, right? This actually shows... I don't know if this is correct. This looks like, yay. We started here at 42,000 on December 20th. We rode up, and we're now sitting at 42,939. So this 1 week performance may not be accurate. Okay, so it looks like we started the week at 42,015. So I'm just going to go ahead and punch it in here, 42,015. And our current holding is at 42,939. I'm going to go ahead and punch it like so, do the calculator. So our percent difference calculator is showing that our portfolio increased by roughly 2.18%. We're just rounding it up to 2.18. Now, how did we compare in comparison to the indexes? Well, the S&P 500 put on a solid 2.28 right there. So I think, yeah, we're almost in line. We're just slightly off there. That's not too bad. So 2.28 there on the S&P. The Dow Jones put on a nice 1.65. The NASDAQ, check this out, went up 3.19%. This is from Tesla right here. Tesla went up really nice this past week. Then we have the Russell 2000 up another whopping 3.11. So here, we have 1 week remaining here in 2021. We have our first place right now, which is the S&P 500, up 25.82%, followed right behind by the NASDAQ, up 21.45%, the Dow Jones in third place, up 17.46%, and the Russell 2000 at 13.51%. So yeah, everything is kind of in line as far as where I had expected. You know, the S&P 500 is a really hard index to beat. The NASDAQ gave it a run for its money these past few years just because of how technology, those tech stocks have advanced in the short term here. But just recently, they've just been kind of getting hammered here. But a few of them did have some pretty good growth. So if we take a look here at the 1 week performance, you know, what really stood out to me here was Tesla. Tesla moved up 15.11% this past 1 week alone. Microsoft up 3.01, Apple up 2.33, Nvidia 4.41, Google 1.71, Disney, Netflix, all super positive here. If we look at the year-to-date performance of these, check out Google there, 67.65, Microsoft 50.48, Apple 32.85, Nvidia 127.04, and so on. Really, if you are investing in any sort of technology, if you are investing in real estate, banks diversified, insurance, healthcare, real estate, I mean, just about any area, sector out there besides financials, it looks like some of the credit services got hammered here. Entertainment, such as Disney, they had some massive, they had to close their amusement parks and just recently started reopening it, but it's not enough to have really brought that position higher for the moment. Activision Blizzard, they took a huge hit here recently with the scandals and everything negative with them kind of going on at the moment. So they fell from I think $100 at some point all the way down to 65. They're still off those lows of $40, $50, but slow recovery there for Activision Blizzard. And yeah, there's our weekly performance in comparison to the indexes. If we take a look at the 1 year here, 1 year this portfolio is up 23.84%. We can see here market gains make back 6,263, and we earned a little over $1,000 this year. So we earned so far $1,053.21 just from dividends received in this account that have been reinvested back into the portfolio. Now, how did we do in comparison to, say, the indexes here? If we take a look at the 1 year for the S&P 500, it's up 27.62%. So not quite as high as, say, the S&P 500, but hey, we're pretty close in line there. If we take a look at the Dow Jones, the 1 year here is at 19.04. So we slightly overperformed the Dow Jones there. The NASDAQ is at 22.25, and the Russell 2000 is at 11.86. So overall, I believe that our portfolio did pretty well. Overall, I don't think that the indexes include the dividends reinvested in them. So really, our performance may have just been slightly decreased here, say 20 some percent based off the return for this year. So it's pretty in line between the S&P and the Dow Jones, and it's a pretty safe investments as far as dividend style investments with long-term growth. Besides there's a few in there that are a little bit smaller cap style companies, but for the most part many of them are just long-term slow growth potential. But I'm going to end up changing a little bit of the details within there. So how is the current portfolio paying as far as dividends? And for this, I use trackyourdividends.com, completely free website here where I'm able to input my portfolio. I can add an account in here and I can start adding all my holdings. Well, I went through here and added up all the holdings that I currently have within M1 Finance using their holdings tab here. I sorted out all alphabetically and then just kind of sat there and just Looked at the current shares that I have, what the average share cost is, and I got to 42,942, which is pretty accurate. We're just slightly off by about $2 and some change-ish. So not too bad overall. So the current portfolio sits at a yield on cost of 3.44%, meaning that we have owned these companies for now 4 years. That means we've sat through 4 different iterations of them raising their dividends from where we purchased it to where it's now sitting with the current yield. And then we've also received those dividends from the companies, reinvested those dividends back into some companies that were either the same or other companies within our portfolio, just kind of boosting our overall income and yield without investing our own capital. So that's pretty nice right there. Our annual income currently sits at $1,167, but this is going to be cutting down here in the short term, just because in number 5, I do plan on selling companies. Now, the companies that I do plan on selling are Kimberly-Clark, number 1. So let me go ahead and I'll pull up a little graph here. I'll go ahead and show you guys which ones I'm actually selling out of here. So I'm going to be selling out of Kimberly-Clark, 3M, Southern Company, Walmart, and Cardinal Health. These are the 5 companies that I plan on selling out of here this year, here towards the end of the year. So nothing that really stands out as far as, why I guess I'm selling out of these. Obviously, I believe that the growth potential for these in the long term is kind of, staggered and not happening. When I looked at the revenue, their earnings per share, they looked at over at the Earnings Whispered. I took a look at their last quarterly earnings and such. I feel like the growth potential for these 5 in the portfolio is not there for where I want it to be. So Kimberly-Clark here's the chart. We have the price, the 200-day, 50-day moving average. Price recently broke out, and this could potentially, there could be a breakout here. We could see Kimberly-Clark, it already broke out over the 50-day, 200-day moving average. We could see this retrace potentially back up to 150, but I'm not going to sit here and wait for that to happen. Or, it could actually fall down and retrace back even lower. So that's sort of Kimberly-Clark here. I'm not going to go into a huge amount of detail on these positions. I'm just going to be removing them out of the portfolio, and I'll show you here in just a second. 3M, here's the graph for 3M, and this is over the past 3 years. So here, during 2018 and through 2022, right, it was mostly good days out in the market, but here we are, this position, lower, and I owned it since 2018. So I'm not underwater on this position. Let me go look here. I don't believe so anyways. Oh, look at that. I am underwater by 0.95%. So while I've owned this position for the last 4 years, it's done absolutely nothing, and it's down $11.76. But I am going to be selling out of it, not keeping that one. The other one here was Kimberly-Clark, KMB. That one is positive by 7.58%. The other one I'm going to be selling out of is Southern Company. Here we are. It's at $66.54. So not quite at an all-time high, but I'm not selling it, deep down in the deeps. So SO here, we're taking a look at SO. Where you at? So it's up 25.6%. It wasn't a position that I beefed up enough early on. So here it is at $542. It's up, say, 26%. It's not a position I want to be beefing up at the moment. I don't want to throw any more capital at it. I feel like it's had a really good run since being in the portfolio. I just want to take that capital elsewhere and reinvest it somewhere else, right? That's sort of what's kind of going on with that one. Walmart here is at $139. I recently bought in a little bit more of Walmart, but I kind of just thought in the back end, I don't really want to be invested in Walmart here at the moment. Again, this is another position that has $843 invested in it. It's up 31.47%, so it's not negative by any means. It's positive here at the moment. So just selling out of it, just going to be locking in some profits. None of it's going to be obviously tax because it's within the Roth IRA. So I'm just going to be moving that capital elsewhere. Then we have Cardinal Health here. Cardinal Health is at $50.75. This one right here, if we take a look at this one over the past 5 years, that graph there doesn't look amazing. And if we take a look at where it's at in the portfolio, I don't know if I'm positive or negative there. I am positive by 2.3%. So while it's been in the portfolio for the last few years, it's kind of just trended sideways and not done a whole lot for me. So a lot of these either don't have the capital in them that I really want to have within them to kind of make them move. And a lot of other ones, I feel like the growth potential on them is just not there. So I'm just going to go in here and just thin it out 100%. So here, what you do is, you don't remove them from your holdings. Instead, you go into these positions and you sell them out as much as you can. Actually, let me go back and cancel this real quick. I should have actually sold more, just in case what happens here on Monday is that this actually breaks higher. It's actually worth, instead of 1565, it goes positive by 2%, and it's worth, say, I don't think it's going to reach $1,800, but I want to oversell these. When I sell something, I just want to oversell. So there we go. We sold out of Kimberly-Clark here. And the next one is 3M. Just go right on in there, hit buy, sell. Go ahead and select sell. I'm going to go ahead and punch in 1400 on the 3M, confirm the sell. Go back, done. Go into my Roth where I once again hit SO. We're going to go ahead and, I typed SP. There we go. SO, buy, sell. Go ahead and select sell here at the top. This one only has 681, so I'm just going to go ahead and punch in 8,000 right there, or 800. Hit done. We got just two more here. We got Walmart, which is next. Next on the chart block, we got Walmart here. This is showing 56.67. That is because of dividends. We've made $52.29 of dividends since we've held this position. And you can see here, look, we started with this position back on January 8th, 2018. So over the past 4 years, our investment of $843 has produced $317. And it's kind of broken down by market gains and earned dividends. So we're going to go ahead and hit buy, sell. Select sell right there at the top. I'm going to go ahead and just punch in, $1,200 right there. Again, we're just kind of overshooting, confirming the sell. And yes, selecting done and going back. And we got that last one, which is Cardinal Health right there. Go ahead and select buy, sell, and sell. And we're going to go ahead and punch in $1,100 here. $1,100, confirm sell. And there we go. So what's going to happen now here is on Monday, we have 5 confirmed sales. We're going to be selling out of these positions, 100% out of them. Now, they're going to still be in the portfolio, right? They're just, I'm selling the equity of them. But after the equity is removed from them, I'm going to go in here into my edit, and I'm going to be removing these positions from here. Now, the reason I'm not doing this now, so if I go in here and select this and I remove it, and I go and I select all and I equalize and I hit save, right? What's going to happen is if I did this, that if I remove any slices, they will actually be sold during the next trade window and the proceeds will be reinvested into the pie overall. So it's going to be automatically reinvested. I have no say-so in how the equity from Cardinal Health will be reinvested into my pie. It'll just be kind of thrown in there into all these positions. So here, when I sell Cardinal Health, it would throw it into 3M, ABM, AbbVie, Apple, Cisco, Clorox, and so on. So it just go down my portfolio based off my target percentages and automatically reinvest it. So by, I'm not going to be doing this way. I'm selling the equity out of the positions first. That way there's very little equity. There's going to be like $0. And then I'll have a cash balance sitting there of say $5,000, $6,000. And then I will go and edit, remove those holdings from my portfolio. Oh, the onesie twosie dollars will be reinvested automatically, but the majority of the cash will be on the sidelines. waiting for me to specifically invest the capital back into the portfolio. So that's the way that's going to work here going forward. And now I have to go through do a little bit of, I got to do some research as far as what positions I want to be either reinvesting that capital into to kind of boost these holdings up. I would like to buy a little bit more of, say, Lowe's, Stanley Black & Decker. There's quite a few. I need to go through here and see what's the best deal for 2021. What's the best deal for 2022? I don't so much look at the history or the percent gain that I've gained. I just want to look at the current value of the holding. What are the financial metrics looking like right now? Because what the value was, say, 2-3 years ago, it doesn't really matter when we're in this new market as of today, right? So I just got to go through and do a little bit of research, and I just want to cut some holdings that are not performing as much as I would like, or just, pretty much that, right? So that is going to be it for this video. Let me know in the comment section below, are you planning on thinning out your portfolio? Is anything underperforming? Is anything, been really performing really well that you've just been wanting to add more capital to? Let me know down there in the comment section below. I think we hit all 5 areas that we wanted to cover today. So if you have any questions for me, definitely go down below, hit, the little comment there, drop me a comment, say hello. If you guys are brand new to the channel, definitely go down in there, hit the subscribe button to subscribe to the channel, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, would really appreciate that. And I will see you guys in the next video. Bye-bye.